Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here's some notable token price moves and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. All right, well, it is another week in crypto, and I'm back, guys. Sorry for the 2 week hiatus, but just while I've been gone, or even just in the last week, we've had quite a bit go on. Mt. Gox has officially pushed the repayments to next year. So they were supposed to start at the end of this month. They're now next year in 2025. The SEC also filed a suit against Cumberland DRW, which is the digital assets arm of DRW based in Chicago, alleging them of operating as an unregistered securities dealer. And then finally, just in the last couple of days, Stripe has officially brought back crypto payments to their platform, hopefully in a sign that crypto adoption is getting more serious with some more corporates. But as always, we have tokens to talk about, so we will get right into it. So first up, we're going to talk about Uniswap. So Uniswap, which is the largest decentralized exchange, announced this last week that they're actually going to launch their own layer 2 called Unichain, because why not? So the project claims basically that they need this L2 to have faster block times, and they basically have faster swaps. So reminder, even though Uniswap is a decentralized exchange, it doesn't have an order book in the same way a traditional exchange would. Like if you go to Binance or you go to any exchange, you can see the orders there and orders are matched. So Uniswap uses what are called automatic market making pools, and so essentially you're kind of just swapping at like whatever price that is available at that time, or the market price. The idea though is that Uniswap can get their feet, they can get transactions and swaps happening much faster on their own L2. The other thing too is that creating their own L2 means that Uniswap can generate fees in addition to the swap fee that is paid out to liquidity providers or market makers. Those fees can also be taken in gas. And so they can also return some of those fees to token holders. So again, if you aren't really familiar with Uniswap, there's been a long debate because they had this token that they issued. They gave it mostly to users and to some investors starting in 2020. And as a result, the token, though, hasn't done anything. It's been a governance token, which most people in the space have agreed doesn't really have a lot of value on its own. The idea, though, was that eventually token holders could vote to put in place a fee switch, or basically some sort of mechanism to return assets to return revenues to token holders. That vote has happened and failed many times. A lot of people are worried about taxes, legal implications, regulatory implications. So as a result, that just hasn't gotten off the ground. Now, this would basically be kind of Uniswap's way, though, by creating their own L2 of getting around some of that, because then they would be able to essentially use some of those fees that they generate and return it to token holders without it being like direct revenue. That has been one thing. Many have also, though, unfortunately been quick to point out that Uniswap is the largest fee generating app on Ethereum, and this could potentially further devalue the large layer 1 blockchain. So Uniswap, just some technical details here. Unichain is going to be based on the OP stack. It's going to be natively interoperable, which means that supposedly it should be able that you can swap stuff that's on other EVM compatible chains without having to go across those chains. The testnet, they said, is already live, and the mainnet expected later this year. So like I mentioned, Uniswap is the largest DEX by volume, and it is the 4th largest trading venue in crypto behind Binance, OKX, and Coinbase. It is up 5.7% for the week. All right, next we're going to talk about Avalanche. So Avalanche is it's a pretty large layer 1 protocol that was started by one of the ex Ethereum co-founders, and uses also is EVM compatible. So smart contracts are compatible with Ethereum's. So the Avalanche Foundation announced that it's planning to repurchase tokens that it sold in April 2022 to the Luna Guard Foundation. So if you're new to crypto and you weren't around in 2022, there used to be another very large layer 1 project called Luna or Terra. They unfortunately they melted down, had a full-on bankruptcy in, I believe it was the end of 2022. But before that happened, they were kind of one of the big layer 1s on the block. And at the time, they did a token swap between Avalanche and Luna for tokens. So basically the idea though is that Avalanche is actually repurchasing part of the bankruptcy agreement as Luna winds down their foundation. So they're repurchasing 1.97 million tokens, which is worth about $54 million at today's prices. And they're going to be returning it to Avalanche's treasury, which good for the project because basically those tokens potentially would have been dumped on the open market if they had just been returned to either bankruptcy claimants or the bankruptcy court. We don't really know. So this is good in the sense that Avalanche has gotten back a good chunk of their tokens, and they can decide how they want them to be distributed. No details, however, on how much they paid for them, if it was today's prices, back 2022 prices, or whatever. So separately though, Off the Grid, which is a shooter game based on Avalanche, has been showing some impressive stats in the past week. The big one is that they actually became #1 in the Epic Game Store. They've had almost 5 million wallets using the game, and they've had a lot of non-crypto native streamers playing the game and promoting the game to their followers on platforms such as Twitch. So that you might be seeing has been getting a lot of traction, a lot of excitement on Twitter and Twitch and other venues like that. We'll definitely be watching to see if this kind of momentum continues and spreads to other assets in Web3 gaming. Avalanche is up 6.4% on the week. All right, last up, we're going to talk about Athena. So Athena is the decentralized stablecoin issuer. They released a proposal this week to add Solana as a collateral asset alongside ETH and Bitcoin to their USDE stablecoin. So again, as a quick refresher, if you're not familiar with Athena, they basically allow a user, they started with the initial project where they allow a user to deposit ETH or stake ETH and receive their stablecoin USDE in return. What Athena does on the back end is that they take out a short perpetual futures position in ETH or Bitcoin or SOL, depending on what asset was deposited. And then they use that ETH that the customer deposited as collateral. The difference is the funding, and that is collected and distributed to the stablecoin stakers and also to ENA stakers. And they have a lot of other components of their product. But basically, they make quite a bit of revenue. They've been one of the largest revenue generating projects that has come about in the last year. The announcement also comes off a larger announcement a few weeks ago, which we didn't talk about here, but pretty important. Athena revealed that they're basically working with BlackRock to issue a new stablecoin called USTB, and that's going to be backed with shares of BlackRock's Buildle fund. So very exciting news for Athena. It has really been on a tear. It is up 38% this week. All right, guys, that's all I have for you this week. I hope you enjoyed our insights. Tune in here next Wednesday at 1 p.m. Pacific to hear what's driving token prices.